Hi Chris, thanks for coming down today. The Straits Times Real Estate Investment Trust Index has outperformed the broader STI market thus far. Will it continue to outperform the market?
Real estate index in Singapore, firstly, is driven by investors who favor properties. So again, as agents really do like properties. Now, when we look at the macro aspect, US rate hike definitely is not going to happen within the next 3 to 6 months. With the Brexit happening right now, you do see a lot of funds flow out from the UK back into Asia, and we do think that this will actually drive up the outperformance. So, long story short, yes, it will outperform.
Why should someone invest in the Singapore Real Estate Income Fund instead of buying individual REITs?
Well, for starters, an investor that first starts out in the real estate, you probably have no idea what they actually want to buy. So one key point would be diversification for investors. But of course, given that the Singapore real estate market is actually very small, if with enough sum of money, you can actually buy the entire REIT. So, but one of the so-called pros of the fund is that we have access to IPOs. So for a regular investor, you may bid for your IPO, but you may not get it. But for a fund, what we do is that we do get IPO offers. So this is another upside for the investor. Lastly is rebalancing onto the different allocation sector, because when you look at the REIT, it's split up into various sectors, and we do a bit of overweighting and underweighting, and this is how we actually derive alpha for the fund.
How does the fund derive alpha from the market?
Okay, before we actually buy into a individual REIT, we take a top-down perspective view on the fund. Firstly, we look at the yield spread of the market. The yield spread would be the risk-free rate versus the current rate of the REIT, whether or not is it attractive. Thereafter, we'll look at the various sector allocations. Like for one instance, 3 years ago, we were underweight in the office space, and currently we are turning neutral towards, we are slightly more positive towards the office space. So in a sense, thereafter we look at the individual valuations of the REIT itself. And finally, on the assumption that where we are unable to find any attractive REIT in Singapore, the fund is actually able to use up to 10% of this NAV to actually invest into overseas. So yeah, in a way, this is how we actually derive the alpha for the fund.
Is there a targeted yield? What is the frequency of the payout, and do you pay from capital?
Okay, let me answer your questions in 3 points. Firstly, yes, there is a targeted yield of about 5 to 6%, but this is very dependent on the market itself. So when market yields are being compressed, definitely we will not be able to actually pay you 5 to 6%. But what we do intend to give investors is a regular stream of income. So this fund, we intend to actually pay investors on a quarterly basis, and thankfully till date we have not paid out from the capital before. So majority of the income actually paid from the income received from the REITs.
How does the fund maintain its yield in an upward market trend?
For a general market trend, when market yield is actually being compressed, we do believe that there will be outliers around. So at that point of time, you probably do see a couple of REITs where it still have attractive, where we still be able to find attractive yields. So this is where our analysts will actually come in to probably evaluate on the REIT to see whether is it attractive or not. And if not, we actually look into overseas for yield seeking.
What is the outlook for the remaining of this year for the real estate markets and REITs in particular?
Okay, for the remaining half of the year, most of the events probably will have happened already. The next upcoming event would be probably the US elections. But that being said, what we do think is that rate hike probably would still not happen for at least next 3 to 6 months. So interest rates thereafter would probably still be low, and we would still see attractive yield coming from the REIT sector. That being said, for Singapore macro sector alone, if you look at the S-REITs, most of these companies actually do have inorganic growth, whereby even though they are listed in Singapore, some of their base operations are actually listed overseas. So what you do see is a diversification of the assets. So in a sense, we are rather we are rather positive on the REITs market, especially onto the retail and office sector, where we're beginning to see a turnaround in the office sector.
Thank you, Chris, for your market insights today. For more information, please visit our website at www.poems.com.sg/unit trust or talk to us at any Phillip Security branches. Thank you.